I wholly believe investing is an art, not a science. And it's hard to put numbers on this stuff.
To me, innovation is what builds a moat. And I think that's what Musk is probably doing. He is innovating his way. Steve Jobs with the iPhone.
All told, had I followed Never Sell, I would have my own castle.
This is Wall Street Wildlife. Before we get to this week's show, a short word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account 6% or higher yield that remains locked in even if the Fed cuts rates.
What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset's moving, so you can actually understand what's driving your portfolio performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares.
Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description. For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife. Hello and welcome to the latest Wall Street Wildlife with Christoph and Luke and special guest Matt Cochrane. Matt, welcome to the show.
Hey guys, glad to be here. Glad to see you guys again. It's like a reunion.
It is a reunion. It's been a little while, but we were all buddies at Seven Investing, and we've been reading your stuff for way back when you were writing for the Motley Fool. So it's awesome to reconnect with you on the Wall Street Wildlife podcast.
It's kind of you to say, Luke. I think I was reading Christoph's stuff when I first got involved investing on the old Motley Fool boards. But yeah, it's always a pleasure to catch up. Always a pleasure.
Listeners, we have got a fantastic show lined up for you this week. We said to Matt, hey, come on the show, come and chat to us. Like, what do you want to talk about? And he gave us 3 ideas to topics, and we like them all, so we're going to do them all. So today, we are going to chat about, do moats still matter in this fast-paced world? Why are moats important? Different kinds of moat. And we'll give some examples of moats that are maybe built to last and maybe some that have spectacularly failed. Is the Magnificent Seven still magnificent? We're going to debate the future of those tech giants in the face of disruption and scrutiny. And finally, we're going to tackle, is never sell a smart strategy or a recipe for disaster?
Looking forward to it. Looking forward to all 3. We got a good 3-hour show ahead of us.
Yes, sir. Well, Matt, like you're new to the Wall Street Wildlife podcast, so just in case that any of our listeners haven't heard of you, do you want to tell us a little bit about who you are, what you do, and any fun projects you're working on right now?
Yeah, and one, just thanks for having me, and 2, thanks for this opportunity. Full time, I'm a detective. That's my day job. So like all my investing is like it's kind of like my night shift and my weekends. And right now, like I do some freelance work for longtermmindset.co. That's the Brian Feroldi and Brian Stoffel guys and old Motley Fool colleagues of mine. And I love working with them. And of course, I used to be with Seven Investing, and before that, wrote for Motley Fool. And you can always find me on Twitter at the Matt Cochrane.
I'm a big wire guy. And so everything I know about the world of detectives, I've learned by watching The Wire. Are you closer to Detective McNulty or The Bunk? Assuming you've watched it.
I have watched it. Actually, so The Wire is like, I would say well, first of all, let's just say of all the cop shows that are out there in the world, like 99% of them are like garbage, right? Like if you're coming from the job, you're just like these CSI or, any of those shows, you're just like completely unrealistic. However, The Wire is like one of the 3, which I say is like, when people ask me, like I say, my job's like maybe like 50% The Wire and like 40% Bosch and like 10% Reno 911. So it's some kind of mix between those 3, but The Wire is a great show. Obviously, when you get into the seasons where they have like, they set up a neighborhood where they don't basically police anymore or whatever, and all the criminals go there. I mean, like, it gets a little silly at times, but there's a lot in The Wire I really like, especially how like the city politics play into the department and things like that. There's some good stuff there.
There is a segue to the investing world. There's a famous scene, I don't know if you remember, where an OG detective, Lester, they're all running around. They don't know what's going on, but he says every detail matters. And he shows the young whippersnappers like how to trace every last dot and to follow the logical conclusions of every last dot. And then, of course, that blows open the case eventually after all the dots get connected. I kind of think that's what good investors do too. Work from that mantra, every detail matters. And you never know ahead of time what particular detail will provide something fresh and exciting.
Yeah, no, I mean, yeah, and there's some parallels. You're absolutely right. Like, you need to be thorough, you need to be detail oriented, and I think mostly it's like sometimes things are obvious, and you have to know when they're obvious, and don't look for don't construct some conspiracy theory in your head when it's something's obvious. But also when something's not obvious right away, like just keeping an open mind, being able to all right, well, I'm gonna go with this theory, but I also have to consider the butler did it, or the wife, right? Whatever. You have to keep an open mind.
That's great. Like Christoph and I are always dissecting each other's stock picks on the podcast, and like keeping an open mind to like the bear case and hearing like someone else's view. We're doing battle over two companies right now, SpaceX versus ASTS Spacemobile. So Christoph's going to tell me next week, I think, why my SpaceX technology is a bag of shit.
I've already told you that. I've already told you that innumerable times. Maybe next week is when you actually listen.
So wait, they catch rockets though. Yeah. I mean, that can't be like total garbage. They catch rockets. I've seen it. That's pretty cool. I mean, that's if you catch rockets, I mean, there's something there.
Well, that's the old leisure demand. It's weird for me, actually, to be split around Musk in terms of pure investing stuff, because I'm a Tesla shareholder. So obviously I want that to succeed, and I'll believe everything he says about Tesla, sort of. But then when I see what he's actually spouting to make his inferior Starlink company appear way more than it is, I'm like, he's outright lying. He's bullshitting, and it's kind of like fascinating, like playing both sides in one human.
I'll tune in. I'll listen. I'll listen to it. All right. I don't know. I mean, they catch rockets. That's not. Is that CGI? I don't get it.
No. Well, they catch rockets, but rockets are not the things that send the signals to your cell phones. So it's a whole different thing. Yes, they have excellent engineers. True.
Well, we know what they do have. They have an excellent moat because they're the only ones catching rockets right now. And maybe that brings us nicely onto our first topic of today. Do moats matter? When you kick us off, Matt, and tell us what is a moat?
So yeah, I think a moat is just any kind of competitive advantage a business has, right? Imagine a castle back in the day, right? And there was an invading army and they couldn't get to the castle or sack the town because there's a big moat around it. And I think that's what we're just, so we use it as a metaphor when we talk about companies. Does this company have something to protect it when the competition comes? Because when you're talking about the free market, right? In a capitalist economy, excess returns is always going to attract competitors. I mean, that's like an economic law, right? If you went back 100 years or 150 years, whenever it was, and I make a beef patty and I grill it and I put cheese on top of it and I start selling it and people are like, wow, that's really good. So everybody comes to my restaurant. Well, the restaurant down the street's going to see that and be like, oh, I can make a beef patty and put cheese on top of it. And whenever somebody comes up with a good idea, it's going to be copied. And that competition will drive down returns. If I'm the only restaurant anywhere that makes cheeseburgers, I can charge almost whatever I want for it, right? I can charge absurd amounts. But if every restaurant on the street and in the city and in the country sells cheeseburgers, well, then I can't, because if I charge too much, people are going to go to other restaurants. So an economic moat is just basically something where if a competitor comes in and tries to copy what I'm doing, I have something to protect my profit margins.
Christoph, you got anything to add on this one? Give us some examples of moats. What's an example of a strong moat?
Well, I won't do that. Instead, I'm going to philosophically question this definition because I think it's so important. I've always been confused by what makes an effective moat. because, to Matt's analogy, sure, I could see a castle, right, and a drawbridge and alligators underneath. And if, I get that. But then I think of something like Coca-Cola. And as far as I could tell, Buffett, is the OG in investing in moats. And he invests, a huge portion of his portfolio across the years in sugar water, which anybody could make in theory. So what was the moat? Oh, it's call it the label on the bottle. But how hard is it to make another shinier label? And I invested in Celsius before, but when arguing for a moat and what makes it effective, I'm sometimes really confused. You know what I mean? They seem sometimes counterintuitive. When you have, so I don't know how you think of it, of that particular weirdness of effective drawbridges.
Yeah, that's a great point, right? Look at the Apple iPhone, one of maybe the most beloved product in the world, I would say right now. And I think Apple is one of maybe the most beloved brand. But what it does, I mean, it's a small rectangle that fits in my pocket. And basically a lot of companies can do it now, right? It can access the internet and access almost any app I want, and it can use Android as their operating system. They don't even have to come up with a new operating system, but if they really wanted to, they could, and it could do basically everything that the Apple iPhone does. And yet people still go out and, especially in the US, they're going to buy the Apple iPhone. One type of moat is intangible assets, and that's when you start talking about like a brand. Coca-Cola. Why do I choose that sugar water over Pepsi? Because I do. I always choose Coke over Pepsi, and it's a very minute difference. I could tell in a blind taste test which one's Coke and which one's Pepsi, but it's a very, very small, subtle difference. So why do I choose that every single time? And then why do some people choose Pepsi? And why do I would never, ever, ever choose RC Cola or some brand I've never heard of? I never buy the Walmart cola. I always buy Coca-Cola Classic. Why do I do that? I don't know, but I do. And I do think brands, I kind of think are the weakest moat. But I still think people, there's probably something there with psychology and everything else, but why do you choose your iPhone every time? And there's other switching costs with an iPhone. You use Apple Photos. So it's not a perfect example, but I think it goes back to World War II. Didn't the GIs have Coca-Cola there, and they all had it, and they came home and that's all they ate? And same with a Hershey bar. Every GI meal in World War II had a Hershey bar in it. So they came home and they loved Hershey chocolate. But I don't know. But I think brands are a moat. I think that's real with some brands. It's not real with a lot of brands. And I think maybe we overstate that. But I think if you talk about some brands that have been around for 100+ years, there's something to it.
Looking at it from the other way is also interesting. Instances where we don't care about the brand. For example, I would claim insurance companies have very little moat because I don't care. I honestly, give me five competitors, whatever they're called, however pretty their brand and image is, the one that's going to cost me the least probably overall is the one I'm going to go to. So
maybe, but there's a UK example of exactly that. You guys have these account switching stuff, when your energy's coming up for renewal, a website that helps you find the best deal. Some clever marketing guys in the UK, there were a couple of competing comparison sites. And these guys came up with this meerkat kind of puppet creature thing, and this Muppet meerkat. And their website is compare the market. And then just because I had this meerkat, whenever I need to think of a comparison website, my brain fills with meerkats and it reminds me, oh yeah, compare the market, compare the meerkat. And I just go to that one just because it's as good as the others. But that's the one I remember because that little viral idea got stuck in my head from watching a TV advert 15 years ago. That's kind of a moat.
We're on brands, and there's different types of economic moats, and we can talk about all of them. But just because a brand is well known and recognized doesn't make it a moat. And I follow Pat Dorsey on this. None of this is original coming from me. And, I don't even like the companies Pat Dorsey really invests in when you look at his 13F, but I think his teachings and he has a book on economic moats is outstanding. And he gave a talk at Google, I don't know, 15 years ago, let's say, right? And he's at Google and he goes, how many people have heard of like a Sony DVD player? And everybody raises their hand. And he goes, all right, now how many people would pay $100 extra for a Sony DVD player? And nobody raises their hand. So, you know, most things basically calls like every piece of technology. He goes like, eventually it's a toaster. Like nobody cares what kind of brand of toaster they have. You're going to probably go buy a toaster. You know, it's like a purchase you make once every 10 years and you're probably just buying whatever like looks like it works and it, you know, very affordable price, you know, and maybe something that matches the aesthetic of your kitchen. And that's it. Like those are the only considerations when you're buying a toaster. And you know, most brands are like that. I think in the old, like, you know, old days, but like 20 years ago, pre-internet days, right? And you're on a road trip with your family and you stop at like a rest stop and you're going to eat dinner and there's a Chili's there and a restaurant you've never heard of. Brands lower the searching cost. If I have a choice between two restaurants and if I like Chili's, so I like that brand to somewhat, I know what I'm going to get there. Like I know I can go to Chili's and get fajitas for $2, right? And and my wife and I can split the fajitas and we're happy. And I never ever heard of this restaurant, so I'm not going to take a chance on it. But like, I think those kind of like brands are like of lowering the searching costs have disappeared because now I can just pull up Google Maps real quick and go, oh, look, this other restaurant, there's a Chili's there, but this other restaurant has 4.5 stars. And, you know, the parking lot looks kind of crowded. So like, I'm going to try that out. So I think like a lot of the brands types of moats like have disappeared. You go to the grocery store or Target or Walmart, wherever you shop, and you see like a couple of like laundry detergents there. You know, in the old days, like I could buy Tide, I could buy Cheer, and I know what I'm getting with those brands. But now if there's another brand there, I can look it up on my phone in seconds and see like, oh, is this a brand like I'm going to be interested in or not? So I think brands used to lower the searching cost. And I think that's kind of gone now because we can all pull the phone out of our pocket and say like, is this other brand that I've never heard of? Is this good or not? And make our own determination. But people still do love some brands like the iPhone, like Coca-Cola. So I still think, you know, there are some brands that really do have moats out there.
All right. So maybe let's talk about a different version of moats. And since Luke, you're squeezing my shoes about getting more ASTS info, here's an open question. One of the reasons that I'm gaining a lot of conviction in a pre-revenue company that is ASTS is because they have lined up partnerships with, call it, I'm loosely approximating 80% of the cellular phone providers for their product. So the big guys. Starlink only has one, basically, T-Mobile. And the big guys, Verizon, AT&T, Vodafone, all of those are also in strategic alliance with ASTS. So they've invested in them. And ASTS is okay with white labeling themselves so that it's all about their partners. So it's an obvious relationship. Where Starlink is basically doing the opposite. People are saying that Starlink is kind of a Trojan horse with T-Mobile, and T-Mobile is in a bad spot. Question: to what extent would you consider that a strong moat?
I'll respond to that because you're attacking my company, right? So I think the nature of that type of moat, like having a strong contractual relationship, can be powerful when you've got like years and years of collaborating and working together and your companies are like tightly integrated. I think this is a bad example of that kind of moat because these guys have like 2 satellites. They've done one demo. Like I haven't read the contracts, you know, maybe they're more like indications of interest or something. Anyway, let's not make it an ASTS conversation, but I would class those kind of relationships as like, yeah, a moat, but I would put them on the weaker end again because like companies break up. There was one in the news the other day, Nubank, I think they've taken a bit of a hit. I may have this wrong. I think Nubank take a bit of a hit in the last couple of days because they were seen to perhaps be now competing with one of their prior partners. And so there's like some concern that maybe there's like a competitor coming that maybe they enabled through that partnership. Businesses ultimately, CEOs have got to protect their own business.
So Christoph, how about this? I think it's easier. Let me quickly say what I think are like the 4 primary economic modes. And then let's go back to this and try to dissect it and see what the mode is. So the first one I say is a network effect, which is basically like the phenomenon by like any value or service or good I have increases when there's additional users. So like think of the telephone. If there's only one telephone in existence, it's worthless. It's a paperweight. It's no good. And if there's two, if I make two telephones and I give Luke the other one, all right, there's some value there. I can call Luke and we can talk, and all right, that's cool, but it's not like really a game changer, right? And then, but like the network effect of like when there's a million telephones and I can call any one of the other people on the million other lines, that's a network effect. It just gets more and more valuable as users increase with it. There's switching costs. So like a good example like is like your bank, right? Like and you have a checking account, and like I don't know about you guys, but like the thought of like changing my bank is like gives me a headache. And there's things my bank does all the time that I don't like, and I'm like I'm not switching, like, right? Because like that just comes with like a whole bunch of headaches. There's a lot of paperwork. There's entering all your new bank information into all of your bills online, and you always forget about one, and then you get a late payment or a late notice. And then there's like that tricky time in between when you still have some money left in your old account, but your new account's getting set up and you're like trying to pay bills and trying to determine which bill to pay from. So there's like a switching cost when it comes to like switching your bank account. And then there's cost advantages. And that can come from like all kinds of things. But for now, let's just say like some like Walmart, like they have cost advantages because of their scale. Other companies might have cost advantages because they have like cornered a resource, Texas Pacific land, right? Like the trust in Texas, they own most of the land on the Permian Basin, and they can drill really, really cheap oil on that. So, they have some cost advantages there. And that can come from lots of things. Ford, right? When Henry Ford made the Model T, like he invented like a new business process, like with the factory and assembly line to make cars. And for a long time, that was a competitive advantage because he could make cars cheaper than anyone else. He wasn't hiring like a fine craftsman to craft the whole thing. And then there's intangible assets, which are like brands, patents, licensing rights, intellectual property. You can talk about Disney. And I think most moats can be categorized into one of those four categories. So what you're talking about is like if you have a contract, like AT&T has a contract with your space company. So I would say there's switching costs there. So now AT&T, and I don't know the specifics, so I hope I'm not messing it up. But like if AT&T has like a contract with and has invested in a company to switch, I mean, there's switching costs there. And on top of that, depending on how strong that contract is, but it might be like, it could be an intangible asset because there's like legal stuff that like if AT&T pulled back and didn't hold up their end of the bargain, or the space company didn't hold up their end of the bargain, like they might be sued, right? So I would say like that moat there is potential switching costs, and there's potential like intangible assets. So that's how I would categorize it.
Matt, do you have a company in your portfolio today, or one that you're a fan of perhaps that you think has a particularly strong moat?
Well, hopefully all the companies in my portfolio have strong moats. I mean, that's ideally what I look for. Like one example I love is Moody's, actually. So like, or any of the rating agencies. So like Moody's, if you're not familiar with the rating agencies, if I'm a city and I want to raise money for new water infrastructure in my city, right? So like I need to raise debt. So I'm going to issue a municipal bond for $200 million, the cost of the project, right? Like I almost have to go to one of what they call the big three, which is S&P Global, Moody's, or Fitch. Those are rating companies. Why do I have to go to one of those big three? So like back in the 70s, right, the SEC approved, I forget what they're called, but like some kind of like, there's a designation for it, like statistical rating organization, but they only granted credit to three companies, and it was Fitch, it was S&P, and it was Moody's. So for like 30 years into the early 2000s, like those were the only companies that could give ratings to this kind of debt if I'm a city. So I had to go there. Now in the early 2000s, they opened it up. And so now there's like 25, 30 of these rating organizations that could theoretically grant a rating if I'm a city looking to build new water infrastructure. But I'm not going to any of those other 25. I'm only going to the big three. And usually you have to get rated by two. So usually I almost have to go to like two of the big three. So why? Because like I've collected quotes over the years, but they'll talk about like investors. Hold on, I think I actually saved it up. This is from like an an old Forbes article. And they're talking about Moody's, and this bond trader goes, a broker calls you up and says, do you want to buy this bond? One prominent fixed income investor said, he goes, you say, what's the rating? And he says, S&P AA, and you say, sure. He says, XYZ firm AA, and the conversation's totally different. Because as soon as you go to another company, nobody trusts that. And so even though like the legal, like the intangible assets are gone, there's no more regulatory hurdles to becoming one of these statistical rating organizations. Those are gone. The brand is just so strong. And like Moody's has a slide up like on their investor deck when they go like basically like if I'm a city, like I don't care what Moody's charges or what S&P charges to rate my bond, because I'm going to get a lower interest rate I have to pay on the $200 million. So whatever I pay Moody's, if Moody's charges, and I'm making this up, but like Moody's charges $20,000 and I can go to XYZ and get it for $10,000, I could care less, because if Moody's rates it, I'm going to be paying way less interest rate, because that's what's going to interest people who will buy my bonds so I can raise the money for this water infrastructure project. Like it has to be rated by one of the big three or people won't buy it. That's how strong those brands are. So I do think, to me, and that's one of the strongest moats. If you're familiar with with what happened in the financial crisis, or you watch the movie Big Short, or you read the book, like Moody's and S&P were the absolute villains there. There was a lot of winners. The Big Short highlights some winners. There was a lot of losers, and people did things wrong, and a lot of that can be chalked up to incompetence. But one of the main reasons everybody was like getting wrong was they thought these mortgage bonds were safe, and they thought they were safe because Moody's and S&P were giving them AAA ratings, like even though it was like full of garbage. And doomsday scenario for Moody's and S&P, and it didn't matter at all. They got fined. They paid their hundreds of millions of dollars to the government. Business as usual. Nobody cares. Nobody blinked. You still go to Moody's and S&P. Like I can't imagine a scenario worse than that they caused, that they were like a pivotal player in, and nobody cares. Nobody cares. They're still the big three. Between those three, Moody's, S&P, and Fitch, they have like 95% market share.
Hey, Matt, I care.
Okay, you care, but are you raising money? If you had to raise money, you're still going to go to Moody's and S&P, because if you have to raise $100 million to build a space rocket, like you don't want to pay 4% interest rate because you care so much that S&P are villains 15 years ago. You want to pay a lower interest rate.
So Matt, have you ever had something in your portfolio and you felt the moat has broken in some way, and then has that steered you out of a stock?
Well, in hindsight or at the time? Well, let's talk about PayPal. So it's a stock I recommended several times at 7 Investing, sadly, and a stock I at one point at its peak I had like a 10 bagger in it, and we can revisit this when we talk about never sell. And I thought it had a real network effect. It had like hundreds of millions of users that used it all the time. I used it in my personal life, and like I could just see how easy it was. It made digital payments real easy. And then the COVID happened. And what's funny about COVID is like, it definitely fooled me. There was a lot of like winner or companies that seemed like winners at the time, but actually COVID turned out to be like one of the worst things I think that could have happened to them. And I think that's because it brought a lot of attention to like their areas where they could dominate a niche before, and then other companies would move in really quickly because of COVID, because it kind of made it more necessary. But PayPal probably was already doomed. I mean, like with things like Apple Pay and Google Pay and just things like that, I am by nature a slow technology adopter. So like I was probably one of the last of my friends to have a smartphone. I was one of the last of my friends to, do a lot of things. I'm very set in my ways. And maybe that helped me miss it, like the mobile payments and how that was changing. But in early 2021, PayPal gave some guidance that basically said they were going to double their users in the next 5 years. And within 10 months, and so the stock skyrocketed. The stock had already gone up a lot. The stock skyrocketed more. And within like 10, 11 months, they had to cancel all that guidance and said basically they were not only not going to double their users in the next 5 years, but their users might actually slowly, steadily decline. And that wrecked the stock. So like whether it ever had an economic moat or not, like I would argue that at one time it probably did, but I missed it when that economic moat eroded and dissipated. And then my instincts to hold on to a stock during bad times held me, compelled me to hold on to it longer than I should have when the thesis had changed. So, so that would be an example of where, in hindsight, I was like, oh yeah, their moat is gone. That they do not have a competitive advantage. Lots of companies can do this now, and there's no real switching cost of going from PayPal to Apple Pay to Wise or any other. Now there's like a dozen. Zelle. I missed that one. I missed the economic moat eroding, and it was a stock I was very intimately familiar with, and I totally missed it.
I'm curious about your take, because I exited Shopify from my portfolio probably 6 or 7 months ago. I finally sold my last piece of it, and it's a stock that I was really in love with and I was a big fan of at Seven Investing. And I know you and I kind of did battle of like Shopify versus Amazon several times. Like I'm a massive Amazon bull these days, and I wonder if I've been a bit too hasty in judging Shopify's moat as eroded. So my thinking was, like they made some unforced errors, right? They spent a ton of money, they bought Deliver, they brought like logistics in-house, and then they realized this was probably like the wrong answer. And I think Toby Lutke's quote was, forget about the side missions, we're going to focus on like the main thing, which is commerce. And so they outsourced their logistics to Flexport, but like Flexport provides services to a whole bunch of other e-commerce platforms. So I started to look at it and go, like, what is their moat really? Like, how do they really compare to just like a WooCommerce, a website builder? What are they doing that, like, when they were doing the physical stuff, like the real moving stuff from A to B, I could see they were doing something hard that would be hard to replicate. But then it's just software. And if it's just software, like, is the moat gone? I don't know. Do you think I've stepped out of this one too soon?
Man, the never sell discussion is going to be great. All right, because so Shopify, it was luck, but like I sold it almost at the top. Like I was in it for a very long time, and the valuation to me was like, I couldn't make sense of it anymore, but I kept holding. And I was like, finally, I just didn't have enough. And like, literally, it's like the one time in my life I could say, like, I point to and like, wow, I freaking nailed it. I mean, it was all luck. I mean, I've never ever done that again. I've never bought at the low. I've never sold at the high. But Shopify, like, I just kind of sold at the right time. I think you can make arguments. And it's funny how, like, when you sell a stock, it's just harder to keep track of. It's like I really like Toby and the CEO of Shopify. I like their leadership. I think Harley Finkelstein's still there. But like great executives, I love what they're doing. I think there's some moats there. I think they have like some network effect for their services. And there's definitely switching cost. If I'm a seller on Shopify, and my payments come through Shopify and I'm using their marketing services, or, there's a dozen services they have, like as little add-ons they can sell to their vendors. That would be very costly to move off of Shopify onto another platform. And so I do think they have like switching cost moats. The problem with the switching cost moat is like that doesn't help you get new customers, right? That helps you keep your customers, which is obviously very important. But you also want to win new customers. And Amazon offers a lot too, and can they probably offer it cheaper? And full disclosure, Amazon's my largest position. I think they have wonderful moats all over that business. I love what they're doing. And can they deliver it faster? So like, I remember when Shopify announced they were getting into logistics, and they were saying, well, we're spending, and it sounded like a lot of money, right? I forget what it was, but I think it was like $2 billion or $2.5 billion to build up all our infrastructure so that we can have everything delivered in 2 days. And this is, I want to say this is 2017, 2018, right? And that sounded great. I'm like, wow, they're going to get everything sold, delivered in 2 days. That's what people want. I'm not sure that's what people want anymore. So like, when we talk about Amazon, like Amazon delivers now, like same day. Like I remember, I've told this story before, but like there was a computer part. My son was into building computers, and there was a computer part he ordered like before school one day. He's like, Dad, can you just order this real quick? Blah, blah, blah. I'm like, sure, whatever. I pull up my phone. It's so easy, right? And I just find it. I ordered it. It's done. I get home from work. He gets home from school, whatever. He's like, Dad, where's my part? And I'm like, what do you mean? Where's your part? He's like, well, we ordered it this morning. And I'm like, well, I don't know. And I look it up and whatever. It's getting there the next day or something. But his expectations have total, like when I think getting something delivered in 2 days is a miracle, right? Like, I mean, when I grew up, if you ordered something off of a mail catalog or something like that, or when the internet was new, you were like, well, I'll get it in a month from now. You know, like I'll forget about that I ordered this, and then it'll come and I'll be surprised and remember that I ordered it, and it'll be like Christmas. But like now it's like, it's same day on so many items, or next day on almost everything else. 2 days doesn't do it for people anymore. And I just, I think the expectations have changed. And I don't know if anyone has the infrastructure, maybe outside Walmart, that can really do that, which is incredible. But like, so I think that's what makes it tough for Shopify. I think they have a niche. If you're a small seller, okay, and they have big sellers too, don't get me wrong, but like, and you want to set up shop, I don't think there's any place better to do it, except maybe Amazon. So I don't know. Shopify is a great company. I just think they're competing against the beast.
I have a bird's eye view on this, which is one, to Matt's point, in the capitalist framework, the giant behemoths, gorillas, over time, I think, end up taking more and more until they get broken apart by monopoly rulings. So in this case, I think the advantage goes to Amazon. But there's also, listening to this so far, there's also something about moats that in one sense seems obvious and simple, right? Castle, drawbridge, it's there or it ain't. And in other ways, it's like you can't actually predict it, even if you're really super smart and you've read all these things, because life is complicated or complex. So I want to say something, Matt. I don't know if you know this, but in every episode, I try really hard to say something that pisses Luke off really hard. Like it's my job as the resident gorilla.
Luke, so he has that British demeanor. He's cool as a cucumber, man.
Watch his reaction. Yeah, but watch his reaction when I say, I don't know. I can't back this up with pure definitive proof. But I keep getting an incredibly strong intuition that CrowdStrike's moat is not as impenetrable as Luke thinks, in that to this point of what is a good moat, and that in the age of AI, in ways that we can't yet understand or know because it's not yet been built or whatever, that companies that, for example, rely on, I don't know, AI networking or I don't know how you would describe CrowdStrike's moat, but something to do with like networking, AI effects, and relationships, that too will be disrupted. And what we think of as a moat now won't be later. You still have you're still not exploding, or you almost exploded.
We had this argument a few podcasts ago. I think there's definitely something in what you're saying, right? I regularly just look down my whole portfolio and just ask myself the question, like what are the risks to each of these businesses? What's going to get them? And like every time I'm saying to myself, is AI going to help them or hurt them? Like I was going to trim Palantir again recently, but I'm like, this DeepSeek news, like the efficiencies, this is going to support them massively. It's going to be like a tidal wave, because suddenly every business can afford to do incredible stuff with AI, and that's just going to play into Palantir's like backyard. But you're right, maybe CrowdStrike could get hurt by this.
I think I do this a lot. Like Microsoft's another one of my top positions in my portfolio, because I love their moats. And whenever I come across a company like Shopify and I say, can they really compete with Amazon? And I look at a company like CrowdStrike and I wonder, can they really compete with Microsoft? Who sees more digital attacks, or who's on more computers and in the cloud more than Microsoft? And if I'm an HVAC company, if I'm a lawyer firm or attorney, something like that, I don't want to like spend my day trying to find the right cybersecurity company or necessarily the best one. But if I have to go to Microsoft anyways for a million things, and then they say, buy our cybersecurity package, and I just think that's easy, right? And to me, the rest is gobbledygook, right? Like Microsoft will say why their security stuff is the best. CrowdStrike will say why theirs is the best. And then Fortinet and all the rest, right? They all say they're the best, or they have to have this or that. And I don't know, like I'm a cop, but if I'm a plumber or a lawyer or an accountant, like I feel like I don't know either. To me, the distribution that Microsoft already has, it's just incredible. I'm always like Like, I'm not a cybersecurity expert, so maybe CrowdStrike is better. I don't know. But then I also feel like, well, most people aren't cybersecurity experts. So it's almost like imperative for CrowdStrike to come in and tell me why you're better. Now, if they have like a huge runway still in the Fortune 500 where they have like these companies have like IT branches and you can just go talk to the head IT guy and maybe they know. So at a certain point, like, I feel like their reach is maybe a little limited to get to like that next tier of business down. But maybe I'm wrong. But a lot of times I will go look at a company, whether it's Shopify, and say, can they compete with Amazon? I look at CrowdStrike and I think, can they compete with Microsoft? And to me, that's a high hurdle. And maybe they can. I mean, there are companies that do compete with these giants. I just think it's hard.
I think, Badger, you have a great company that you're very fond of that in recent days has taken a little bit of a haircut. But when I listen to you describing Axon's moat, it really makes sense as a perfect example of a moat that seems like pretty firm. You want to talk about it a little bit in terms of moat?
Well, and this is, maybe I'll defer this one to Matt and get his take, because like Matt, I'm assuming you and your colleagues are using like Axon's products pretty much every day.
Yeah, and we've talked about Axon before, Luke, and it's an incredible moat. They are basically a monopoly, and when a law enforcement agency switches to Axon and they'll eventually going to get evidence.com, which has a network effect. In my job, like when I upload evidence of a case, it goes on evidence.com, and then the state attorney accesses it from there. With the cameras, it's cheap to get the cameras, and then you pay that high monthly subscription every month. Same thing with the tasers, and they do incredible work with those tasers. When I started, it was like a one-shot cartridge, and you had to switch to cartridge. It's a whole ordeal. They're easy to miss. I mean, now they're making like tasers with like 8 shots, and you can shoot it different ways. It's to me, it's complicated, but it's crazy what they're doing. And those are there's really no competitors that can do all those things. And they've already locked up most law enforcement agencies now. You're not switching. You're just growing. As the population grows, you hire more officers. You hire more detectives that use evidence.com. You need more cameras. The storage goes up, on the cloud storage. I mean, all those things make it very difficult to switch from Axon, an incredible company.
At least you guys are not attacking one of my holdings. We all like Axon. Fantastic. Fuck CrowdStrike, but we're happy with Axon. Okay. Should we bring it round to the Magnificent Seven? Because we talked about a couple of them. Sounds like Matt's a fan of quite a few. I own 4 of the 7. Let's list them just so we know who we're talking about. I think the Mag 7 is Apple, Microsoft, Alphabet, Amazon, NVIDIA, Tesla, and Meta. So Matt, you're... actually, let me give a couple of stats actually to tee up this conversation. So something like interesting has happened, I think, in the last couple of years. I'll pop a graphic up on screen. Like on here, you can see back in 2014, the Magnificent Seven was just under 10% of the total market cap of the whole S&P 500. At the end of 2024, it was nearly 35%, like 7 companies basically being like a third of almost, the 500 biggest companies total market cap. So that's like incredible dominance. And Matt, you shared a really interesting tweet I noted yesterday, and you shared your view on large cap US stocks outperforming small caps for a record 8 years, and small caps are now less than 4% of the US equity market, levels last seen in the 1930s. So like the world has pivoted towards these guys, and that's why we're calling them the Magnificent Seven. Are the Mag 7 dead? Are we about to wind back, and could it be like the rise up of the mid caps and the small caps?
So I think you have to separate them, right? I don't think there is a group. I know we talk about them as the Mag 7 and everybody does, but I think you can go through them and make, at least an educated guess. But I'm going to be the last person to come on here and talk about NVIDIA. It's almost audacious for me to question. Like one of the last times we talked was about 2 years ago, and I was trying to convince 7 investing team to sell NVIDIA because it was too highly valued. And since then, it's only gone up a gazillion %. After you had recommended it. So I'm definitely not going to talk about NVIDIA. Like, you can give your opinion of NVIDIA, and I know you've already done that. I mean, it's an amazing company. I don't know what to say. Essentially, I think this CapEx that the the rest of the Mag 7 is basically paying NVIDIA, is going to die down. But I have no idea when. Like, I thought it was 2 years ago, right? So, like, I don't know. So, you know, I think NVIDIA won't. At some point, I think NVIDIA is going to fall like 50% or more. And that's, I think, consistent with its history. But it could quadruple before it drops. You know, it could. In the meantime, it could quadruple again. I honestly have no idea. Just the other day, actually, I was at an investor presentation by Poland Capital, and they did like a presentation on AI, and they projected like NVIDIA's data center revenue to double over the next 2 years. So I have no idea. So when you talk about NVIDIA, and I think them or Apple is like the biggest company right now, right? Like, but like, I just, like, I don't know. Like, I think at some point it's going to fall, but what it does in the meantime, like I said, I think it'll fall in half. But could it quadruple in the meantime too? Yeah, it could. I just don't know. And I'm glad you took a victory lap on that. It was well-deserved, very well-deserved victory lap. And at some point, I think that massive AI CapEx from the hyperscalers is going to end. I have no idea when, though.
Maybe just to return the compliment. So I also remember a 7vesting conversation where the whole team wanted to sell Meta, Facebook, and you held your ground and said, no, like Zuckerberg's turning this thing around, and you've been proven very, very right on that one.
Yes, thank you. That might have been the same conversation. It might have been this, like, very wrong and very right all at once. Yeah, Meta, I mean, I think it's a super impressive company. I think Zuckerberg, he's super young still, and like just always underrated. And you know, I forget when exactly we had that conversation, but you know, at the time, one of the things we could look at was like Meta repurchasing its stock. And it looked like it had repurchased stock in the year prior to its downfall, like at really, really bad levels. And now when you look at that, you're like, wow, they bought all that stock back at like great levels, right? Because it's like triple the price from there or whatever. They're still growing revenue like at 20+%. I think their full year EPS grew at 60% plus. They still have a lot of cash compared to their long-term debt. And they're still growing users, which is incredible because it's like basically the whole developed entire adult world is on their platform, right? And it's not even that expensive still. I mean, it's like, I think forward earnings at like 29 times, 30 times. It's just an incredible company. And I think like, so this is my friend, I don't know if you guys follow him, but The Science of Hitting, and Alex Morris. And he writes about Meta, and he was talking about like why the stock has gone up. And he goes, I think the answer is straightforward. There has been some needed clarity on the near-term financial benefit from these investments because their CapEx has exploded. And I think that's what we were all questioning at that time when we were talking 7vesting. They're spending all this money. Is this a good idea? I mean, it seemingly seemed like they're just spending money into oblivion. And are they lighting cash on fire or not? But I think now he goes, with strong evidence that Meta is seeing an attractive ROI on all of these investments. And so what was once viewed skeptically is now seen as the path to improved results at the family of apps for Meta. And I think that's what we're seeing. I mean, they have seen an incredible return on investment from all the CapEx they poured in. The CapEx they spent on the metaverse, we'll see. That's still, I think, you know.
Actually, if I made a comment on that, as you were talking, I think, near term, you're right about all of that. But I read up quite a bit around the metaverse, and because I'm interested in legitimate crypto projects, which are tiny amount relative to the circus, I'm convinced that the world is moving to blockchain and that the metaverse, in fact, will be the next frontier. And obviously Meta is the company that's going to be as it's in their name, place you go for the metaverse. So it's futurism and we can't prove it yet, but my bet is on Meta for those reasons as well. So I'm bullish Meta despite my own hesitancies about its past.
Yeah, to me, it's one of those companies where you can kind of take a flyer on the metaverse, but you get the family of apps in the meantime, which is just a cash flow machine. And if the metaverse doesn't work out, I don't think that breaks the thesis for Meta. So I think, like I said, I think 30 times forward earnings. So I still don't, it's not for a company that grew its earnings at 60% last year. I just think it's a great company, and Zuckerberg is just continually underestimated. I will say, for that call, like when we did on Meta, I think that I've never done more due diligence on a company than that. Like on X, I was like DMing people and scheduling Zooms with people who did online advertising, and just like, and they were more than gracious with their time.
Every detail matters. There we go.
Because I remember like a lot of smart people were saying like, no, this company's not doing well at all. Like time to get out. And like that was probably the peak of my like research or diligence on a company.
So we're giving you a pass on NVIDIA. We'll let you not have an opinion on that one. But if you had to pick, say, your favorite and your least favorite of the Mag 7 today, all things considered, valuation, everything else, how would you stack them?
It would either be Meta or Amazon. Amazon's just an incredible company. And when you look at AWS, I think they're incredible switching costs. Like in company's entire digital infrastructure is on AWS. And when you look at their logistics and fulfillment that they have built out, I don't have the current stats in front of me, but like if you look at the square footage, just the raw square footage they have devoted to logistics and fulfillment and deliveries and all the rest, it dwarfs anything else that anybody has in North America. And not like, it's not like they have double what Walmart has. They have like 10 times what Walmart has. When they reported their full year earnings, they talked about like how they had delivered at the fastest speed ever for Prime members in 2024. And they like, I think they had more than like 65% more items to US Prime members the same day or overnight than the previous year. And I told that story about my son. You know, I think expectations now have changed where even 5 years ago, 10 years ago, 2 days sounded great. Hey, I order this and in 2 days I'm going to get it. That's fantastic. Now it's like, if I order it right now, I might get it by dinner time. And that's like, I don't know how they do that. How's that profitable? I ordered a toothbrush, you know, if I need a toothbrush because I dropped mine and my dog licks it or something, like I might have it by the time I need to brush my teeth tonight before I go to bed. I mean, that's just incredible. So if it saves me a trip to Walgreens so I don't have to buy my toothbrush, like I'm all for that. I don't know how that's profitable for them, but I know I'm never leaving Prime. Like ever. Like I will never leave Prime. The only thing that worries me about Amazon is like their day one mentality where everything's day one. You know, we're always growing. We're always investing in the next big thing. And the bigger we grow, we have to invest in bigger and bigger things. And I kind of wish they would go to day two and just say, like, let's worry about becoming more profitable and, you know, buy back some shares, you know, something like that. I worry that as long as Bezos is alive, they might never get there and they might spend money on a bad project next time. But I think money, even when they overbuilt during the pandemic, they overbuilt their logistics infrastructure. And they said that. I was fine with that. Like, I know if you build a warehouse in South Florida somewhere, like eventually like e-commerce will continue to grow and you will be able to use that warehouse, just maybe not whatever for the first year or 2 years or whatever it is. But I was never worried like they're just, you know, like, oh, just totally gone. Just forget about it. It's wasted money. And like for things like logistics and infrastructure, like I don't think anybody's going to catch them. And in the cloud, they're one of the biggest players. And I don't think that's changing either. Whether Microsoft is slightly ahead of them or not, or Google Cloud, you know, catches up more, all possible, all well within the realm of possibility. But I love Amazon's economic moats. I love the company. It's hard for me. It's my largest position. And up until recently, I was still buying shares.
Do any of us have one of the 7 we think might be in more jeopardy than the others?
All right, if you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account.
Public is a FINRA-registered SIPC-insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/wildlife and get up to $10,000 when you transfer your old portfolio. That's public.com/wildlife.
Paid for by Public Investing. Full disclosures in podcast description.
Well, Christoph, I would like your opinion on Tesla. I feel like it's audacious for me to come on here and talk about NVIDIA to Luke, but I feel like it's audacious for me to come on here and talk about Tesla. Sometimes I feel like Tesla's like, is like, okay, here's my very high opinion of Tesla, where I don't know the details, but like, it's like, if it's just a car company, I think it's wildly overvalued. And if all the energy projects and all the robots they want to build or whatever, if that doesn't come exactly to fruition, like what's that going to look like? And what are the odds, I guess, that comes to fruition?
It's interesting living in Tesla's Mecca now. I'm basically next door to Captain Ahab himself. And it's weird to say, but I think, forget all the political complexity of this, but Elon has positioned himself to be potentially the world's most powerful man, which is a shocking thing to say. Like, this kind of thing exists. It's like Napoleon, but for 200 years later. And he surrounded himself with the world's best engineers. We know that they could handle whatever complexity that comes their way, between launching and catching rockets to, outside the shitty Starlink thing, to the world's best cars. When you take away the regulatory hurdles that probably would have limited them, I can legitimately see a world in which what feels to us now futuristic robots are the de facto reality, including the robots that replace labor or change manufacturing to the same degree that Ford changed it, as you were talking about with the Model T. And when you stack all of the, call it, vertically related components, from the robots to driverless cars to the energy products that could kind of help power all of that, and all that ways in which Musk is completely unafraid to invest as fast and hard in AI as possible, I am one of those people that thinks it could be the world's most valuable company by magnitudes. And right now, I mean, obviously it's hard to put quantifiable data on things that are still non-existent, but probabilistically wise, I think it's more likely than not. And that's my bet. Out of the Mag 7, it is the only company that I essentially have a full position in. I only have a nibble in NVIDIA.
It's a funny one, isn't it? Because for all the reasons you guys have both just said, you just can't do anything objective to understand the valuation of Tesla. It doesn't make sense, or it makes such incredible sense. It's all about like the story and whether you believe in that story and your kind of vision of the future. That's going to dictate like where it ends up, because in many respects, it's probably the easiest to catch. Like, they've got BYD hot on the heels. NVIDIA Drive is going into like a bunch of other manufacturers. Waymo is arguably like the better autonomous driving solution. We could debate that. I feel like competition is coming for them hard. There are other people making robots, but are they doing it with the same mindset as Musk, where he's really thinking about like the economics and being able to like production line these things at like $30,000 a piece? Maybe other people have got like Atlas, and some of the other guys have got like incredible robots, but I'm sure they can't produce them at the cost that Musk is trying to. And it's that cost, like that engineering, that's really the revolutionary thing that, as you say, Christoph, could change the world. But just maybe they never get there.
It's interesting. When I hear you use the word story, it takes me back to the conversation around moats, where I feel like we need some intermediary word that's a little more nuanced than that. Because on one hand, yes, everything I mentioned, because it doesn't exist yet, at least not at any scale, is still a story. But at the same time, it's Tesla's already existing manufacturing, call it brilliance, and infrastructure, and call it AI knowledge, and the fact that my car now drives itself already. That's not a story. That's already reality. So somewhere in the middle between, I would say metaverse is closer to a story, because only Meta, I guess, knows the reality of how far they are. And, it's still, but Tesla, I have to swallow when I hear that it's, call it, just a story at this point.
So here's how I do that, work that out mentally, is for, I think companies can outperform in the short term for lots of reasons, right? Like you could buy a company that sells at 4 times earnings and you buy it and it goes to 10 times earnings, right? And maybe nothing much changes. It just got re-rated by the market. So it outperforms for that time. You can buy a company that comes out with a cool marketing strategy, right? Because it has a little logo on their website, right? Like of their mirror router or whatever it was. Or Geico comes up with the gecko. Like we don't care about insurance companies, but it comes up with a good marketing campaign, and maybe that increases sales and over the short term that can drive sales. And then I think a company can innovate, right? Like so somebody can innovate. So like just going back and thinking about like a higher level, like at some point Henry Ford was like, I'm going to build this assembly line, this factory with an assembly line. He didn't have a cost advantage yet, but he had this idea. If I build a car this certain way, I'm going to have a huge cost advantage and I can sell them much cheaper and get them to everybody than what's being done now. And so he innovated his way. And to me, innovation is what builds a moat. Okay. So like, I think you're in the building stages of a moat. Now, maybe you don't get there. Like maybe your idea is wrong, or something else happens, and or there's a paradigm shift somewhere else, and you just get leapfrogged technologically. But I think you can innovate your way to a moat, and I think that's what Musk is probably doing. He is innovating his way. Steve Jobs with the iPhone, like when it first came out, like I don't know if Apple's brand was all that great, and I don't know if there were any switching costs for that first few generations of the iPhone, but he was innovating. Which drove sales, and that innovation built the moat for the iPhone. Just the same way, like if you went back and Henry Ford innovated his way to serious cost advantages for building cars. So to me, innovation is what builds moats. And I think that's where you call it a story. And I do too. I call it that. And it is, but it's like the story of like how he's trying to build a moat. That's how I think of it mentally.
Luke, the second half of your question, and maybe you want some airtime on this. What used to be the favorite company of all time, Apple. I'm one of those loyalists. That remains a question mark for me because on the one hand, it's like, damn it, this company hasn't done not anything. That's not fair. Like when I think of the AirPods as now like a massive product, and the Apple Watch, past Steve Jobs. But for the world's first or second most valuable company, it's so iterative that you wonder, is what the hell is going on behind the scenes? And because we know they're so secretive, I'm left not knowing whether they really are dinosaurs and they're just going to lose because they've peaked, or whether there's this secret cave down there where they're going to revolutionize something that nobody saw coming from anywhere. What do you think?
You and I were in Austin last year, and we did like the demo of the Apple Vision Pro, and I think they've now cancelled that as a product because they're seeing where Meta is going with like the Ray-Ban glasses. Like this big clunky headset just isn't the form factor. So yeah, like I feel like they've misstepped. Like all of my experience of Apple is secondhand. It's like hearing other people, because I've never liked the products myself, because I'm just afraid of getting trapped with the high switching costs. Because if I've got like an Apple phone, I got to buy the Apple Watch, and I got to buy a Mac, and I got to buy like 20 other things, and each thing individually costs like 10 times what the Android equivalent would cost. So like I'm a tight ass. I'd rather have my Google stuff. But like I'm hearing anecdotal reports that the latest phone and the latest iOS, like Apple Intelligence, is not working too well. It's not like you would always think about Apple in the past as being super reliable. They really nail it. And then when they launch something, it's like a perfect launch. But they seem to have like slipped their standards lately, perhaps because they're feeling like the pace and the pressure of the competitors, and everyone's got an AI product. So like, hell, they got to like rush to market with their one.
Yeah, right. And I'd say if it wasn't for them being the world's most valuable company, that's a precarious position to be in. It's almost like they better have something. And that, I would say, is one of those, now you're kind of in limbo land, relying on story and history to repeat itself. And that's not a secure place for me as an investor.
I agree. On top of that, the stock's kind of expensive, right? I mean, it's not really I think they grew revenues 4% in the first quarter, and it's selling at like, I think like close to 40 times earnings, trailing basis. To me, that's just like with a company that like with, The Moat on the iPhone is huge and people love the brand. How long does that last, I guess? And like when AI comes out, and will that change people? If AI is going to be such a game changer that it could get people to finally consider changing their, like, however, their personal device on them, whether that's glasses in the future or a phone or whatever it is. I have questions about Apple too. I think they're expensive. I think they're slow growing. And I think they're like you hate to say it because the stock has done phenomenally well under Cook, but like it did seem like maybe he was just carrying out Jobs' playbook. And now that the playbook has ended, or you're getting near to the end of that, what's next for them? And I kind of wonder what is next.
We've got to get like our other ex-colleague Anaban back on here, because he and I used to do battle with Apple versus Alphabet all the time. I'm a big Alphabet bull, and yeah, I think we seem to be agreeing around the table that maybe it might be the most valuable company in the world today, but maybe it's the weakest of the Mag 7.
So I have questions about Alphabet too.
Okay.
So this used to be one of my larger positions. So I'll say this, since I've left 7 Investing, I probably had like 40 positions when I left, and now I've cut it down to 20. And it's just something like, at my stage of life right now, like I just want less to keep track of. And one of the companies I cut was Alphabet. And not because of anything they're doing now. I think their moat with search is huge. I just wonder with AI, and it's not, I don't think I'm alone in this. I think that's kind of why they have a lower multiple right now than the rest of the Mag 7. Is that going to change the way we interact with like digital information? And if it does, I think Alphabet can be a winner there. I think they could be one of the huge winners, but are they going to keep that market share that they have for search? And I don't know. I question that. And maybe they do. And maybe search doesn't go away. Maybe AI, it changes a lot of things, but maybe I'll always use Google search. I use Google search for everything, but it's just enough question mark for me to say, I don't know. And it's too hard for me. So in the process of cutting down my positions, like I got rid of it.
All right, gents, anything else we want to say about the Mag 7? Or I'll just come back to our original question. Is the Magnificent 7 dead? So today it's directionally 35% of the S&P. Is that going to go up or down, say, by the end of this year?
Yeah, dead. Let's define dead, right? Obviously, the companies aren't dead. Are they good investments from here, right? I'll take the not dead because of the laws of capitalism. The big are going to get bigger, and they have innovators at the helm. So
I don't know if it keeps the 35%, but they're definitely not dead. The one mode I would question would be Tesla, but like I think Elon Musk is a genius. So if anyone can innovate their way into moats, it's probably him. It's just hard for me. They're incredible companies. That's how they got to be where they are. And I don't think any of them are at ridiculous valuations. Again, like NVIDIA, maybe, but like the way they're growing, I can't say it is ridiculous. And I'm definitely not trying to time that. So great companies.
All right, great stuff. Should we come on to our final topic of today, never sell? Matt, you threw this one into the ring as something you'd like to talk about. So why don't you kick us off? What were you thinking about when you said hashtag never sell?
Well, I grew up on Motley Fool, right? Like as an investor, I grew up on Motley Fool, and they definitely preach never sell. And you can look at Warren Buffett, where he says like our preferred holding period is forever. And I think there are a lot of virtues to that. For instance, I sold NVIDIA, right? and I regret selling NVIDIA. I've never done the numbers for this because I've sold more losers than winners, right? Like I've sold Shopify, like I said, at a very good time. I sold Paycom, another company, at a really good time. That years later, like I'm still ahead of where those stocks are now. But if I had never sold NVIDIA, I would have whatever, the money, the position I had there would have been like 6 or 7-fold down. I don't know where that comes out. So what I did with Axon, Luke, is that after their like huge recent gains, it was like up, like it was like overall like a 12 bagger for me, I think. And it was like my second largest position, but at that valuation, I wasn't comfortable with it. So I kind of just cut it in half, and that made me, a lot more comfortable. Like now I have, no matter what happens to the other half, like I took my profits and it's going to be a successful investment. So I think there's like maybe a happy middle ground. Like I also think like when you have a win, just take the win. Like, so I go back to PayPal, and like I said, I had like a 10 bagger with PayPal, and I held on to it, and I basically sold it. I held it for like 8 years or something. And it came out like it lost to the market badly. Let's just say that. I think I made money in it over 8 years, but I lost to the market very, very badly with that money. And could have I just taken a win at a certain point and said, oh, look, their moat's eroding. It's at a ridiculous valuation, but I won. Let's just take the win and sell it. I think there's probably like a happy middle ground where you try to trim your positions as they go up in valuation and maybe add to them as they go down. But that's where I'm at. I don't have an answer. I'm just kind of just almost just thinking out loud.
This is a maddening question because it's I think there's I don't use the word paradox lightly or try not to, but it's paradoxical. The two arguments in favor and against, depending on your perspective and personal situation, they are both legitimately correct. We talk about this all the time. You just did. My greatest mistakes as an investor repeatedly has been selling. Anyone listening to our show at this point must be sick of me saying that. And on the other hand, nobody has ever gone broke taking profits. Money is there to be used to live and do things with for many, unless your life is about the game itself. And there are things like companies that have reached the kinds of valuations that are absurd in the way the tulip bubble was absurd. And when you could see that clearly, to not take money off the table is, I think, an error. So it's weird for me. It's this impossible, it's not that it's impossible, but it's riding a surfboard on a really angry ocean, and you got to just know why you would make the decision you would. All told, had I followed Never Sell, I would have my own castle. I wouldn't just be talking about it.
It's a tough one to navigate, isn't it? And like, you can be so in love with a company, let's say like Axon, because actually Matt, for very, very similar reasons, like the valuation scared me about 2 weeks ago. I also halved my position, coincidentally. And I think we're both probably looking back, because they just reported and like the stock's taken a bit of a ding, we're both pretty happy with that decision. I'm happy to hold it for the long term though. And the way because you're right, Christoph, it is hard to navigate, but the way I try to do this myself, because I wholly believe investing is an art, not a science. And it's hard to put numbers on this stuff. But if you just kind of immerse yourself in the news flow and you read everything you can read and you listen to all the podcasts and the earnings calls, like your limbic system, like some monkey bit of your brain just kind of figures out how comfortable you are with that company, given all the information that's distilling around. And so I try and say to myself, okay, if I woke up tomorrow and Axon had doubled in price, how would I feel? And if I woke up tomorrow and Axon had halved in price, how would I feel? And I just try and get my allocation in my portfolio kind of proportionate to that, so that like when I sold half my position the other day, I felt it was too I thought it was too expensive. And I thought, if I sell half, if it doubles, I'm still going to get like, a doubling on the half I kept. And if it halves, I'm going to be like wiping my brow, and maybe I put some money back in play. So it felt like, I think I had like a 4% allocation at the valuation of, I think it was like 36 times gross profit. I'm like, this should be like a 2% allocation in my portfolio. So it's that's how I try to navigate that.
I'm honored that you said you have a monkey in your brain.
I feel like there's an angel and a demon on each shoulder, right? Saying like, oh, sell it, take profits, whatever. And then the other one, and I don't know which one's the angel or demon, but it's saying like, no, just put it in the coffee can. At the same time, like, I'll say this, just mentally, I don't want 100 positions. I don't want to just say like, well, it's in the coffee can, but I don't have to think about it anymore. Like, I'm not built that way. I've liked the process of getting the number of positions I have down to a more reasonable number. It's much easier to follow. And that's just like less mental bandwidth for me. Like it's a lot easier for me to keep tabs on 15 to 20 companies than 40 to 50 companies. And if I never sell, like that's what it will be, right? Because I'm always, looking at the next bright, shiny object and like getting intoxicated with that and learning about that new company. And I think there's an element to that to it. Like I don't want a portfolio of 200 stocks where like 50 of them I don't even follow anymore, but I never sell. So they're there. Again, I'm just talking out loud though. I don't know the right answer. Like monetarily.
I have another reframe for this. Never sell, I think, is too draconian. It's too extreme. So, but we get the idea, right? As Badger knows, I made a New Year's resolution to not sell any of my EOS shares. That's not, I think, a never sell kind of frame. That's me saying that I am so confident due to my research in the story that when the dips and the volatility show up, when the complexities of the tax code start wobbling the boat, I am committed to waiting it through because I trust all the serious foundations I've laid, unless the thesis like supremely gets busted. But I now know the difference between a broken thesis and just an inevitable problem. So I'm sort of saying I'm never going to sell my shares in the sense of I'm not going to get thrown off by crosswinds.
So, open question. Do you fellas have a never sell, like a true never sell in your portfolios today?
The closest I have is probably Microsoft and Amazon. It would take an awful lot for me to be convinced that their moats are broken and their business models are not going to work. I think it would be like maybe like a whole new kind of regulatory framework that came down from on top that would shake me. So those are probably what I would say are the closest I have where, like, I mean, obviously I read their quarterly reports, but like, I know the clouds will be cyclical, and sometimes Azure will be, oh, Azure growth was 22%, but we were expecting 25%. The stock's down 5% or whatever, like I could care less about that stuff for those companies. Like all I'm looking for is like, basically, are their moats still intact? And they seemingly always are. Those are the companies, like, if you ask me in 5 years, I'm pretty confident I will still be holding.
Tesla is the closest I have, but that's wobbly. I mean, sorry, it's not wobbly. It's I don't know what Captain Ahab's going to do tomorrow. So, it's hard. It's a hard version of this. Badger, you?
I talk about it a lot, but like Intuitive Surgical, but I'm kind of never selling it for a dumb reason, because I want it to be, it was the first thing I ever bought, and I want it to be the stock. Like, I never trimmed. I've got probably a 60 bagger on it now. Like, I've had better performers, but this is like a substantial part of my portfolio. I've got one other stupid one, which is a never sell for like the totally opposite reason. So I think I signed up to some Motley Fool like international service in 2010, and I bought a company called China Green Agriculture, who've now rebranded to Enlightify Inc. I've got no idea what they do even. I haven't been tracking this. Like, I looked a couple of years ago and I was down like 90%. I just got like wiped out on my position. I was like, holy hell, like it's not even worth selling it. But I've kept it, and I looked at it today, and it's now, my original position is now down 99.39%. And so the reason I'm never selling this is, it's like, I don't even report on it because it's literally like a couple of dollars in my investment portfolio. But it reminds me, every time I look at my investment portfolio, this little dangly thing at the bottom, which is down over 99%, like when I was down 90%, if I'd like added a bunch of money to try and, reduce my cost basis, well, that new money would still be down more than like 10x from then. And it's just a stark reminder that like what goes down can always go down further and further and further. So I'm keeping that one for a stupid reason, just as that reminder.
That's a great story. Like my first stocks I bought after subscribing to Motley Fool, and what got me to subscribe to them was 3D printing. You guys remember that? Like, it's going to be the next industrial revolution. And so the thankful thing about investing is that when you start off and you're really dumb and you're going to make a lot of mistakes, is that comparatively, like to your future self, it's not a lot of money. But I think my wife and I had like about a few $1,000s, and we put all of it into like this basket of 3D printing stocks. And for about a year, I thought I was the greatest investor of all time. Because they went straight up. They were in such bubble territory in retrospect. But whatever, I turned like, $4,000, $5,000 into like $15,000 or something like that. And then about a year after that, it was like $2,000. So that was my lesson on not blindly trusting investment services.
Yeah, like we say every episode, like don't even trust us. We do our due diligence. We pick stocks. We talk about stocks that we love and believe in, but like you got to do your own work. You can't borrow someone else's conviction.
Absolutely. Can't borrow conviction.
Right, because the territory will become unstable, and all the market games that have to do with price and short-term stuff are really confusing. It's just par for course that a great stock releasing good numbers might plummet a bad stock might go up based on pure technicals. And the sort of fly by their seat of their pants investors, reasonably logically actually, will get fooled and make the exact wrong conclusion if they do not have that fundamental conviction. And this is, Badger, you and I talk about this all the time. This is, I would say, the most obvious way for anybody to up their game from a dilettante or a complete, call it unserious investor, where you could even say you're gambling, to no, you're in this in a legitimate way and you're here to make money for yourself and your family. And all you got to do is cross the line of doing the work, which for us is enjoyable because we learn about lots of things. I know I sound a little preachy about this, but it's kind of shocking. You say this all the time. It's shocking how many people are unwilling to take that step towards, no, I'm going to get serious and I'm going to actually try to understand what I own.
Well, the 3D printing stocks was like the best thing that ever happened to me, because that's what made me seek out Motley Fool discussion boards, because I was like, seriously, like, what the heck is going on? Like, I'm like, my wife's about to pull the plug on me investing ever again. So I need to figure out what's going on like right now. I can't keep losing my money. And it was literally one of the financially, the best thing that ever happened to me was losing a lot of money.
There's a lot to be said for like having a community of smart folk with different experiences, you know, ideally like people who actually use these devices like Axon with yourself, you know, someone who's actually sat in front of evidence.com. You just learn so much by being in a community. And that is something we're trying to do with our Patreon over at Wall Street Wildlife.
Yeah, I think this is a good spot for a quick shout out to that growing community, because it's so lovely to see, you know, people legitimately contributing to the conversations and building trust, which takes time. And you could only do it when you surround yourself by legitimate people, as opposed to, you know, the unfiltered knuckleheads on totally social platforms where people say shit to get a rise out of you. So patreon.com/Wall Street Wildlife is where you could go to support our show and conversations like this one with our old legendary colleague, Matt. So check us out.
Matt, we didn't make 3 hours, but we have, I think I'm clocking an hour and a half, and we've probably taken way more of your time than you planned today.
No, guys, it was, I always loved talking to you. It was great catching up, and I had a lot of fun. Thanks for having me on, guys.
Go pop some caps and asses in dark alleyways, but you stay safe.
All right, thanks for that. Thanks for that, Christoph.
Well, Matt, before you go, give your Twitters and give your website another plug, just so our listeners know where to find you and your wisdom.
Oh, yeah, sure. You can always find me at the Matt Cochrane on X, Twitter, and I'm on it way too much. That's where you can find me the quickest. But like I said, I also write for longtermmindset.co. They do basically host a lot of classes for different investing lessons and things like that. You can sign up for some free newsletters. You should check it out.
Fantastic. We're big fans of the Bryans over here. It's good work you guys are doing.
Yeah, no, they're fantastic. Fantastic. Absolutely.
Awesome. Well, we always close out this episode with the one question. Christoph, are you ready to become a beast of an investor?
Your journey starts right here.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.